Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. President Donald Trump will decide within 2 weeks whether to strike Iran, according to his press secretary, as Israel hits more Iranian nuclear sites and warned their attacks may bring about regime change in Tehran. Meanwhile, European foreign ministers due to hold talks with their Iranian counterpart in the hope of reaching a diplomatic solution. And in the tech world, SoftBank founder Masayoshi Son is eyeing a $1 trillion industrial complex in Arizona to build robots and AI, all in partnerships with the likes of TSMC and NVIDIA, marking what could be his biggest bet yet. Lizzy.
Well, Kriti, it's been a week now since those initial headlines dropped that Israel had been striking Iran. You had the US on holiday yesterday, futures pointing lower as they come back today, but pairing some of the earlier losses thanks to the delay, as you say, from the White House on Donald Trump potentially escalating and getting involved in the Middle East conflict. It was already a risk-off session in Europe yesterday, so we have futures pointing higher on the relief now, but oil lower by nearly 3% here, and euro dollar at a 115 handle. The countdown to the opening trade starts right now.
Over the next 2-3 weeks.
At some point in the next 2 weeks.
Nuclear, I'll give you 2 weeks for approval.
In about a week and a half, 2 weeks.
Something of a theme. Donald Trump now telling the world that he will make his decision within the next 2 weeks as to whether or not he will be engaging US forces in Iran. Potentially the bunker bombs being used, the bunker busting bombs being used. It feels like an incredibly arbitrary timeline in terms of what we are working with here. Karoline Leavitt talking about the idea we've got 2 weeks, Lizzy. I don't know. 2 weeks feels like a kind of a very long time, a very short period of time. Why 2 weeks? Should we take this seriously? But it's the top headline I read everywhere this morning, and the markets do seem to be reacting to it, which I find peculiar.
2 weeks because Trump likes 2 weeks.
Precisely.
It's what he usually does. That's the period he likes to take to think about things. But yes, relief in the markets that this is going to be strung out for a little longer. Senior EU officials had been preparing for a strike by this weekend. And as I say, yesterday, very risk off. So relief off the back of this. But interesting to note, Israel stepping up its goals here. So you've had headlines saying that, previously they were saying it was up to the Iranian people if they wanted to topple the regime. Now you've got the Israeli defense minister saying the military has been instructed and knows that in order to achieve all of its goals, this man, the Ayatollah, absolutely should not continue to exist.
Well, it's also key here. There's two things. There's one that there's a diplomatic solution potentially on the table. Otherwise, if there wasn't, this would be a much clearer decision-making process, and we wouldn't have to wait 2 weeks or longer, by the way, for some sort of direction from Donald Trump. The other piece of this, though, is one he has to think about his domestic base, but also the fact that Israel did this first in that they didn't have the U.S.'s backing in terms of needing to do these strikes. So what kind of precedent does that create in terms of pulling the U.S. into the Middle East? That's something else he has to talk about in terms of precedent. But
2 weeks. Why 2 weeks? This is the bit that I don't understand. The markets, but they're taking. Why would the markets react to a 2 week agenda that clearly has no frame of reference to actually what's happening on the ground? And we seem to have this relief in the market this morning that the timeline is being pushed out. Why should we believe that it's 2 weeks? Why should we not believe that it could happen tomorrow? The market seems to be perceiving that there is a longer time frame here for a solution. And I'm wondering whether that is going to prove erroneous.
So that's where a diplomatic solution comes into play, and perhaps the Europeans.
Where does it come? From the Europeans? Do you think Trump is listening to the Europeans? How serious? I know that Lamy talked to Rubio yesterday, but how seriously do we take these talks in Geneva today? I don't know. It doesn't feel like there is a great expectation in terms of the progress that could be made.
Exactly. You've got the UK, France, Germany all going to Geneva, but the E3 has been marginalised ever since they tried to resuscitate Biden's accord and trying to, when Trump's withdrawn in 2018 from this deal, Trump doesn't want to be talking to them. He wants to deal with the big players, as he would see it, with China, with Russia, even suggesting Russia as a potential mediator in this conflict. So how does Europe actually get to the table? All we're hearing from European leaders like Keir Starmer, like the Spanish foreign minister on the programme the other day is they need to de-escalate, but do we really see a plan of how that's going to happen?
Well, it's a conversation, and I think that's key here is, yes, there are mediators in terms of being offered up, China, Russia, perhaps the bigger superpowers in the world, but it is still a conversation that's being happening. So if there is a hope for a diplomatic solution, however stretched that may be, that conversation isn't happening directly between the U.S. and Iran right now. That was shelved in Oman. The fact that European leaders are actually having this conversation, having a direct way to talk to them, is a big deal, because at the end of the day, there is a question here if Tehran is now going to be coming to the negotiating table in a weaker position. And that is the cards that perhaps the European leaders can help with. I don't think the roadmap of trade negotiations, for example, where the U.S. and the EU have a more strained relationship, applies to this necessarily.
But do you not think that Trump... I mean, I heard a guest yesterday saying this is the window of opportunity for Donald Trump to fix a major issue in terms of its foreign policy agenda. You know, you're talking about trade. Trump's been finding it very difficult to get trade deals, except for with the UK. They've been elusive with pretty much the rest of the world. You've had a pretty poor turnout to the military parade.
Yep.
And you've got people, teasing him about TACO. Like, if he wanted to project strength, I'm not saying it's the right thing to do, but you can see the argument for why he would strike.
Are European negotiations today in Geneva going to stop Donald Trump deciding whether or not he is going to drop the large ordnance bombs that he has on Iran? I find that... I think that lacks credibility. I don't think there is a belief in Washington that these talks are going to change the agenda significantly enough that it's going to change the situation on the ground, either in Jerusalem or Tel Aviv, or in Tehran, or in Washington. So I struggle to see how these talks are going to deliver something that changes the direction of the narrative that we are on at the moment, which is to the destruction of the Iran nuclear program. Whether or not we see leadership change in Iran, I don't know. But certainly the objective, and Israel is talking about this again and again and again, is to remove the threat of nuclear weapons from Iran. And if you are going to achieve that, is that going to be through putting negotiations back on the table? I think Israel has passed that point at this stage.
I think Israel has passed that point, but we should mention that in the last 24 hours, Marco Rubio has had a direct conversation with David Lammy, who will be at those conversations with there. So there is a question here of how much are they on the same page. And no, it may not change the thinking in Washington, but I think it does give, or perhaps provide, a general idea of what level the Iranians are looking to come forward and have a conversation. I think that's a missing piece that the U.S. doesn't have just yet, which is why you have this 2-week time frame. But bringing it right back to the markets, Lizzy, you talked about this risk-on sentiment. We are still playing a little bit of catch-up in terms of U.S. futures. They were, of course, closed yesterday. So we're seeing a bond market that's catching up to some of the data as well. Meanwhile, European futures are flying this morning. Yeah. I wonder how much of that is liquidity. I wonder how much of that is volume.
Yeah, and oil pairing gains as well as we have this news. We have some amazing reporting from our team showing that Iran's been racing to get its oil out into the world. We've had oil exports spiking since Friday. The Chinese not so concerned either, because they've got enough more oil to be getting on with. Of course, they're huge importers. So maybe that's why they haven't been rushing to send weapons to Iran, because they don't need to.
Why are European futures up this morning? Is my question. What is it that is? Is it just a week in which we've seen a significant softening? We've come back down and tested recent lows. We've gone through those lows. Why are European futures reacting positively? In as much as, at the moment, you've got a fairly flat open priced into the States. You've seen very tight ranges this week in terms of the bond market. So there's no clear direction coming from the fixed income story. You have seen a little bit of a bid coming back into the dollar, but we've still got trading 115. European futures are higher this morning. My question is why? Is it the 2 weeks? Or is it something else? Or is it simply positioning? You've also got triple witching today, so you've got a volatility event that potentially is on the horizon as well. So there's lots of things that can change with those numbers that we see on the screen in front of us. London is underperforming after outperforming this week quite significantly on the oil trade.
I was going to say, it's been 3 days of losses when it comes to the stock 600, so it might be that. It might be the triple witching. And to your point, sometimes maybe no news is good news. I mean, in this era of 2 weeks, maybe that is enough to get there, because maybe a strike isn't on the table. We're going to digest that throughout the show.
Maybe it's one word, TACO. Europe thinks that TACO is about to happen.
And he's going to chicken out from making this attack. I don't know. It's the 2 weeks that I struggle with. It is such an arbitrary number, and he keeps using it, and therefore I struggle to see why it is being taken seriously over the next... We're going into a weekend where anything could happen. Barbara Leaf's going to answer some of our questions this morning. Biden's top diplomat in the Middle East. We'll get her take on what is happening here, how the Gulf states viewing all of this as well. Victoria Clark, Santander CIB UK's chief economist, is going to be joining us. We've got retail sales data out this morning as well. You've also got some borrowing data which we need to focus in on as well. Kira Nandra, Jupiter Asset Management equities head, will be joining us on a week that we have seen equities rolling over a little bit. And Sir Simon Mail, former UK Middle East defence advisor, will be joining us later on in the programme. Lizzie.
In terms of what's on the diary for today, at 9 a.m. London time, we have the euro area credit data. 1:30 p.m. London time, it is the Canada retail sales numbers. 3 p.m. London time, US Conference Board Index. And then, as we say, the Iranian foreign minister meeting the EU delegation, as well as the David Lammy, the foreign secretary of the UK, over in Geneva.
Look forward to the readout from those talks a little bit later on. What else do you need to know this Friday morning? Australia has moved one step closer to a controversial social media ban for under-16s. The country's government has been conducting a trial to analyse the feasibility of accurately checking users' ages and has concluded that it is possible. The result clears the way for the law to come into force by the end of the year. Other countries watching this story very carefully. Many parents watching this story very carefully. The EU's Economy Commissioner says the bloc is, quote, making progress in trade talks with the United States. Valdis Dombrovskis says Brussels is continuing intensive talks ahead of a July 9th tariff deadline set by President Trump. Dombrovskis warns, though, that the EU remains ready to take countermeasures to protect its economic interests. And Canada, meanwhile, has opened the door to increasing tariffs on US steel and aluminium next month if its trade talks with the Trump administration stall. And Bloomberg has learnt that SoftBank is looking to team up with TSMC in what could be its biggest ever bet. The plan involves a $1 trillion industrial complex in Arizona to build robots and artificial intelligence. SoftBank's founder, Mei Son, envisions a version of the vast manufacturing hub in China's Shenzhen that would return high-tech manufacturing to the United States. So, 1979, Deng comes into power in China. One of the first things he does is he creates special economic zones in China. Shenzhen was one of the first 6, I think, that was created. This feels eerily familiar.
The investment in manufacturing complexes is crucial. It's the amount, to me, that I think is crucial here. $1 trillion. A couple months ago, when Masayoshi Son, at a press conference with Donald Trump, he had promised $100 billion. Donald Trump on the spot said, can we double that? Yep. It's now gone to 165. So talking about $1 trillion in partnership with TSMC, NVIDIA, et cetera. Fascinating. We're going to be diving into that, of course. Tom McKenzie will be joining us later in the show to give us some more of those details and how we should be thinking about that investment. But coming up, of course, it is central bank decisions that were overshadowed by geopolitics this week when it comes to the markets. Rate settlers did give markets some clues on future moves. How's that showing up in the stock and bond market? Plus, of course, our top story, Iran racing to get its oil out to the world while crude prices take a bit of a breather. As no news, good news at the moment. We'll bring you the latest from the sector. But up next, we're going to dive deeper into the geopolitics out of the Middle East. A former U.S. Assistant Secretary of State joins the program in just a few minutes. We're going to get her take on the conflict and the prospects of U.S. involvement. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg. Welcome back to the opening trade. Donald Trump has given himself 2 weeks to decide whether or not to strike to Iran. The White House press secretary says the U.S. president wants to give diplomacy a chance. We'll see what the odds of that actually are. Joining us now, Ambassador Barbara Leavitt, former U.S. Assistant Secretary of State for Near Eastern Affairs, joins us around the table. Barbara, a pleasure to have you on the program. Thank you so much for coming in. Before we talk about the ripple effects and what these 2 weeks actually means, I'm curious, you were in the administration as recently as the start of this year. What level of knowledge did you have about Iran's nuclear program?
Well, we've had a pretty good insight into the dimensions of the program and where it's going. And we heard in March from the DNI Tulsi Gabbard a sort of unchanged perspective in terms of the intent weaponization on the part of the regime, that there's not yet been indications that they intend to weaponize or they are trying to weaponize. But there's no question, and this has been the case for some years, but especially in the last 4 years, there's no question that Iran is accumulating the pieces, the options, and the highly enriched uranium that can have no civilian purposes, and that gives them the options to go towards a weapons program.
So with those ingredients to get there, how long would it take, from your perspective, for Iran to get to a nuclear bomb?
It's a matter of weeks to go from 60+% enrichment to weapons grade, which is about 90%. Then you've got to put the pieces together for the weaponeering. But you could also purchase something pretty low rent, if you will. So it's a matter of weeks to do the enrichment up to weapons grade, and then it can be a matter of months until they do the weaponeering.
What would it take, Ambassador, to end the Iranian nuclear program if you were to approach it from the point of military action? How far do you need to go? What level of destruction needs to happen in order for this to no longer represent a credible threat over a reasonable time frame?
Well, it's a fair question, but it's a question that doesn't have an easy answer, unfortunately. Sure. The regime has worked over time to disaggregate all the pieces of the program, and, of course, to bury the heart of the program, the enrichment facility at Fort Al, under a mountain, literally, to disperse it and to harden the pieces where they are. So there's not as the U.S. military would say, a one-shot solution, one and done. Yes, striking Fort Al successfully would be devastating, but it wouldn't end the program. And you still have the knowledge base within the scientific community in Iran.
Is it possible to end it militarily? It sounds like you're saying...
You have to have a mix of military and, military if you can't get the Iranians to seriously negotiate, I suppose, but military plus diplomacy. You've got to have a negotiated solution, and that's...
Okay.
Yeah.
So what does the diplomacy look like? Does the military need to come first? How far does the military need to go before the diplomacy...
There's no neat answer. It really depends on where the regime is now in thinking...
What's your assessment of that?
Very difficult to say. I want to hear a pretty clear, full-throated, yes, we're ready to negotiate from the regime, and we're not hearing that yet. There's conditionality. Israel has to stop hitting us, then we'll talk. President Trump is clearly looking for something pretty clear. Yeah. And then you get down into the weeds, and it's a technical discussion. At the outset, months ago, there were lots of different terms, lots of different notions on the part of the administration, on the part of the president himself, which left a sort of a cloud of uncertainty as to what the U.S. was aiming for. An interim agreement, like the Obama administration did, which sort of freezes the program and then works toward a more definitive final agreement? Or were they looking for a Libya-style arrangement, which is to fully deconstruct the program?
Yeah.
Ambassador, we have the European foreign ministers in Geneva meeting their Iranian counterpart today. Does Europe have any hope of having any influence on this? Long pause.
Very long pause.
Well, no. Look, of course, I mean, to the degree that the Europeans can provide a sort of a united front sort of approach to Irak today and say, look, buddy, you're out of options here. So don't just say you're ready to negotiate, but make it clear what you're ready to negotiate to. They've been hung up over the issue of retaining the right for enrichment. But as I said earlier, the flirting with the notion of something larger, something more ambitious, shall we say, in the wrong direction than a civilian program is how they've gotten to this state. So yes, the Europeans can push Irakchi to make clear that he has no options. They are ready to do snapback sanctions in October, and then to pivot to the White House and say, we have done our piece.
So basically, the Europeans need to get real here. How would Biden's administration have dealt with Israel at this point?
Well, I mean, I think that's too theoretical a concept at this point to really, I can't really answer that one. We did make an effort, a concerted effort through the 4 years of the Biden administration. Well, it was on and off again, but at the time, the Iranians would not talk directly to the negotiating team. And so you had this sort of theater of being in different hotel rooms, going through the Omanis or others. Doesn't work. So it was not a level of seriousness that I would expect. And clearly, the Iranians didn't take serious the notion that the Israelis would get into the mix with them militarily.
Is that the role that Europe can play, though? I mean, in these talks, we talk about maybe Europeans aren't able to have necessarily a seat at the table in terms of decision-making in D.C. But in terms of creating that negotiation ultimately between diplomatic channels, between Iran and the United States, is that the role that Europe can play?
Well, I don't think the White House doesn't seem to be looking for a mediator as such, although the Omanis have obviously done their piece through these last 2 months. But the administration wants to have direct discussions with the Iranians. And that is what I understand. There is a direct channel right now. But the question is whether the Iranians can politically step down from where they are and stop putting conditions on the next phase.
What's the risk for the Gulf countries at this point?
It's significant.
It is, but there seem to be various risks, and I'm wondering how you would sequence them in terms of, is the risk a destabilized Iran? It's a huge country,
yes,
millions of people.
Yes.
We've seen what regime change could look like in the region. It can get very ugly very quickly. Is the risk nuclear fallout? Is the risk that we see US military bases in GCC countries being hit? I'm kind of... Near term, how should I be thinking about kind of how I sequence that out? Is the near-term risk that we get maybe Straits of Hormuz being affected, that we get military bases being hit? The longer-term risk, the more unquantifiable risk, is maybe the regime change story.
So look, I think what everyone is beginning to fear is the prospect that this is kind of open-ended, that that Israel has a set of war aims that have shifted from dismantling, destroying the nuclear program and attriting as much of their military and IRGC leadership as possible, the ballistic missile program, and has shifted to something larger, which is a regime change. That opens up a Pandora's box of possibilities. In the past, in the recent past, as recently as 2019, Iran, under pressure, such as it was the summer of 2019, turned to a suite of tools that is used over the years very successfully, harassing shippers in the Gulf, closing off or threatening to close off the Strait of Hormuz, disrupting the flow of traffic, seizing tankers and their crews. And then in September 2019, the regime actually hit Aramco, Saudi Aramco, with a direct hit. That was unprecedented. Yep. So in the past, this is the sort of thing that the Iranians would have done. I think they're less likely, although there have been lots of fulminating threats against U.S. forces if the U.S. enters the fray. I think that's less likely simply because they don't have the means to manage a two-front war, and they certainly don't have the means to deal with the U.S. They're trying to message President Trump in sort of in a variety of ways, some of them sort of harder-edged, some of them slightly more beseeching.
Well, Barbara,
but it's regime change, I think, that
is the biggest threat.
Yes.
30 seconds here. I'm putting you on the spot. If we are talking about U.S. involvement, we're talking about boots on the ground, which admittedly is domestically unpopular. Where might that be in the Middle East?
There's no question that the American public is not ready, has not been prepared by the president or his administration for the prospect of U.S. military intervention in Iran, and certainly not for U.S. forces on the ground. No question.
Ambassador, great to see you. Thanks for stopping by to see us and updating us on your latest thoughts. Ambassador Barbara Lee, former U.S. Assistant Secretary of State for Near Eastern Affairs. Coming up, Santander's Victoria Clark joining us to wrap a big week of central bank decisions. We'll talk about the economics. We've also had some data out of the UK this morning. We'll roll that into the conversation as well. 33 minutes to the market open this Friday, going into a weekend. How much risk is on the table? We'll talk about that next as well. This is Bloomberg.
30 minutes away from the start of the opening trade. It is that Friday feeling when you look at futures, at least. You are seeing green on the screen, a massive divergence from the futures picture over in the States to the point of almost 1% gains on the Euro Stoxx 50. Although keep in mind that we have had 3 days of losses, light volume, light liquidity. That, Lizzy, probably all factoring into that story.
Yeah, of course, we had Treasuries off yesterday for Juneteenth, but they're back on now, and across the curve, they are lower yields, 3.92% for the 2-year. But looking across the European continent, it's pretty much a story of yields down across the curve, except the Spanish 10-year up 2 basis points.
Well, let's talk about what the central bank story is all around this. We've had a series of meetings this week, the Fed, the Bank of England, Bank of Japan. You've had the SNB, the Norge Bank. We did see Switzerland, Sweden and Norway easing at their latest meetings. We've been talking to a series of central bankers. Take a listen to what they had to say.
We expect interest rates to be on a gradually downward path in general, but of course we need to be careful. Inflation is still too high.
Several factors at work here. One is certainly the stronger Swiss franc, especially against the US dollar. Energy prices that were lower and put inflation to the downside.
The thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months.
Quite different messages in some ways from different central banks. The Bank of England and the Fed sound like they're singing from the same hymn sheet. Obviously, the European picture is different. The ECB's already cut aggressively. The Swiss have their own problem in terms of the currency and what we're seeing in terms of inflows. Apparently, Swiss tourism is being affected by these strong Swiss francs. Try buying a croissant on Bahnhofstrasse, and you'll understand why, maybe. Victoria Clark, UK Chief Economist at Santander CIB, joining us around the table this morning. We've got a lot of data, which we could plug in, and we can talk about UK retail sales this morning, which look weak. Consumer confidence looks strong. I don't know what you take away from that. But we've got this tension between growth and inflation, and different central banks are focusing differently on each of those two factors. But then we've got this kind of overarching geopolitical uncertainty. Things could change very quickly. Is it possible to make a decision on the data that you're seeing right now as a central bank that is one that you can stand by and be happy with?
I don't think they can. I mean, I think this is the message from all of the central banks is they've tried to be pragmatic. As you say, some of them are more worried about inflation. I mean, in the UK, that's still very much there. The Fed has got this potential inflation problem, but it's not yet arrived yet. And others have got too little inflation. So they're being pragmatic. They're balancing out what they've got in front of them, the kind of what they know. And they've got these huge elephants in the room, which is what we don't know.
It's macro forces that, like the Swiss, if you take the Swiss as an example, we're seeing inflows into the Swiss franc because the world's a worried place right now, and as a result of which there's an extraordinary amount, probably it's too much going into the Swiss franc, but that's what they're dealing with right now. You take a look at the Fed, you take a look at the bank. Bailey, in the statement yesterday, talked about the fact enormous uncertainty around the situation in the Middle East. So is the message this week kind of the data's useful but not that useful? We're going to park our decisions. Do we wait until kind of August, September? Is that the next time frame we can usefully check back in terms of our understanding of what's happening here?
I think the data's important. I mean, particularly the Bank of England's really domestically focused at the moment, so it's got all these global factors, but it wants to lean to some extent on the data and not be too late. But there are also, some huge factors that can swing you way, way, way away from your central forecasts. I've been, recutting and recutting numbers, changing oil prices this week. And, you get a different number every time you have a look. And that's the world that they're in. So they can have some confidence in their numbers, and they have to base part of their view on that. But they'd be foolish if they bet the house on it and make big calls, big communication messages, big commitments, only to come back in a month's time with something different.
But Victoria, it's wild to me that, you had this dovish vote split at the BOE yesterday, and you've got the Deputy Governor voting to cut when inflation's 3% and it's forecast to stay there for the rest of the year. You've got the Bank of England Governor having to write to the Chancellor to explain why it's still at that level. Even when you're seeing all of that...
Are you implying the bank's not credible anymore?
I said nothing of the sort, Guy. Okay. But given that Dave Ramsden's something of a barometer of the committee, do you now see August as completely nailed on?
I think there's a very good chance. I think Dave Ramsden's a good signal for that. I also think that getting from 4.25 to 4 is one thing. I think once they start to get to 4, bar, that evidence threshold just becomes that much higher because, as you say, you've got high inflation still. Yes, the labour market's weakening, but it's weakening because of labour costs pushing up. That's inflationary. So, you still need to have some restrictiveness there. And they've said in the minutes that there's lots of different views and nobody really knows exactly where restrictive rests. So they've got to be quite careful. So I think they can do August. I think keeping gradual and careful and having Ramsden pushes me more in that direction. But I think it's the thereafter. People, if you talk to people on our trading floor, it's very much that you've got good clarity on the next month, but trying to, see the world 3 months on, and let alone next year, it's a really, really difficult task.
Yeah, especially when you've got pretty awful quality data. But do you think it's fair to say that they are focused on the domestic pressures more than the international pressures, and that's the right thing to do? That's the way they should be focused?
I think for the moment, when I look at what's going on in the UK numbers, in the labour market data, in the inflation numbers, it is much more domestic at the moment. But that can change. The energy price shock can really shift it. And one of the things that we've been looking at this week is that now suddenly that risk of having the peak for UK inflation in September at 4%, or even, a little above if your worst case scenarios come through, is there. And, it's not my base case, but these are things that we all need to be ready for. And in that world, the risk of inflation expectations getting de-anchored is much more material.
Yeah, I was speaking to Jennifer McEwen at Capital Economics yesterday. She said you could see the oil price going to $150 a barrel because of what's going on in the Middle East. I don't even know.
And the pass-through is really fast. That's the problem with it, is that it instantly passes through. You see it at the petrol pump within a couple of weeks. Gas prices obviously move a little bit slower, but you can see what's happening in terms of gas. The pass-through is fast.
It's not just something, surely, like an outside risk that you need to think about. Have we not learned from Ukraine?
Yeah, I think that's right. Mostly the sort of experts in the energy market don't seem to be talking about numbers to that scale, but those ranges need to be considered. And so I think, look, things can shift a lot before August. That's why I wouldn't say it's nailed on, because of the reasons you say. If an energy move like that comes along, then obviously, everybody needs to rewrite their thinking. For now, though, it does appear that the jobs market's loosening with a good amount of pace, and I think the bank is always very attuned to that. Obviously, it's attuned to the kind of risks on inflation. And I think probably it's about trying to work out which door is most open and walking through it for August. After that, I think that they need to be more careful. And that was actually one thing that jumped out from the MPC minutes for me yesterday, was that they added that extra clause in careful and gradual, which is, that signal of needing more evidence to keep going on from there.
Victoria, I'm looking at 134 now, but almost 135 earlier in the session when it comes to cable. What role is the strength in the pound playing in the UK economy?
Well, look, we had a Q1 GDP figure, which was really pretty good. So it didn't appear to have, done too much. And the pound's obviously pushed up a little bit. But it's the data are being driven more by some of the external factors which are batting around business decisions. So, for example, in Q1, it was very much about trying to get your exports done before the tariffs came down. I think for Q2, you're seeing some reversal of that. And the currency is important. For me, obviously, it's really important when I'm thinking about the pass-through for my inflation forecast for the petrol pump prices. If it hangs around where it is at the moment, that's helpful. But obviously, in the context of this whole discussion we're having, this is another thing where you would say there are very big risks. And again, the kind of scenarios that you end up with when you move your assumption on cable, your assumption on oil prices lead you to very different judgments on what the right path for monetary policy is. And I'm not the sort of person that advocates for setting monetary policy based on the pound, but obviously it is very important at the moment.
It's fascinating that you say that. Victoria, final question to you, a little bit broadly on how central banks are thinking. Perhaps we talked about the currency component. We've seen the S&B cut to zero in the last 24 hours. Addressing some of that currency strength as well, negative interest rates are back on the table, not just for S&B, but it's something that's kind of in the ether of discussions for central banks. In a world where we're still talking about inflation risk, how effective are negative rates as a toolkit?
Well, look, the idiosyncrasies across global economies, across the central banks are huge. So, look, for Switzerland, it's obviously back on the table because they're worrying now that they've got a negative inflation print in the last month, and they're trying to find a way out of that. And for them, that is very much about, do I want to go into a war with the US on currency manipulation to deal with my inflation and do a bit more currency intervention, or do I want to do it through interest rates? And I think for them, there's two very awkward options there. I'm not sure, I'm not sure which one that they'll take, but perhaps at the moment in time, one might say that the currency channel might be more impactful in delivering the inflation, because it appears that the rate cuts so far really haven't done too much on that front. Now, for the other central banks, I think, for me, actually, the kind of discussion, it's much more in the background. I mean, I think I'm much more concerned at this point about persistent and sticky inflation rearing its head than anything that leads us there on the downside. And particularly when you look at this environment, the kind of stagflationary feel to it all, inflation, lack of growth, the kind of weakening labour market that you're seeing in the UK in particular, those concerns would make me more concerned that, that the risk is the other way.
It's a fascinating environment right now. Victoria Clark, UK Chief Economist at Santander CIB, giving us a little bit of taste of her views of around the world. Coming up, we're going to stick with the UK specifically, because UK House Builder Berkeley reporting full-year earnings and naming a new CEO. Part of our stocks to watch next. Stick with us. This is Bloomberg.
Iran is racing to get its oil out into the world, a sign of the unusual logistic steps that Tehran is undertaking as the US moves joining Israel in bombing the Persian Gulf state. Let's get more now with Bloomberg Europe oil markets editor Alaric Nightingale. Really good to have you around the table. I mean, this is pretty amazing, the moves and just how we've been tracking them. I feel like this is the sort of stuff that only Bloomberg can do. How much is Iran cushioning itself from whatever any outside actors want to do?
I think it's just a pretty sensible step, right? There's a lot going on. Even accidentally something could happen, or oil could become part of the kind of issue. So, moving as much oil as you can, as quickly as you can, is a pretty sensible thing to do. So we've looked at the tops of the satellites, and you can see from the shadows that they're kind of filling up at the same time as loads of oil is getting loaded onto tankers, which must mean that some is coming out of the kind of domestic system and going to the export market. It's very unlikely to be a ramp up in production over the short term like that. It's almost certainly kind of being taken from the domestic market, put into the international market, keeping revenues going and maintaining kind of supply.
Alaric, we asked this question in yesterday's show as well, and this might be a slightly offbeat one, so bear with me. There's a question here that if the Strait of Hormuz gets closed, or already a lot of shippers, and just like Shell, for example, Maersk, they're already rerouting in preparation of for that possibility. That's on top of already rerouting around the Red Sea as well. Is there a question here of running out of fuel, running out of labor, that enough rerouting actually pressures the end commodity price the way it's pressuring shipping rates right now?
I think if you look at the kind of very specific things they've said, I don't think they are rerouting. I think they are very, very cautious. But actually rerouting, no. I would say they're not doing that. But if you get a more serious situation, then you can certainly have pressure on fuel prices. You don't need to close the Strait of Hormuz for that to become a much bigger issue. For example, really significant harassment of shipping. People are going to get worried. Traders are going to become more anxious and so on.
Have we seen what Iran is doing currently before? Is this a regular occurrence?
Well, we did see. I don't know about the build-up of storage at Karg at the same time as they were ramping exports. But we've also observed that they've cleared out the anchorage areas. Like there's a big ocean area around Karg Island, the big export terminal, and they keep lots of tankers there and they come and go, and that's all normal.
Why are they doing that? Is that a safety story, or is that a...
I think it's the same thing. It's a prudent step. If you get the tankers out of one area, then they become completely, untargetable.
Right, so they're moving targets of opportunity. So were they to strike other people's shipping, they are moving their shipping into a more dispersed...
I think it's more that they're just moving their own shipping out of the way. I don't think that this is their area. Nobody's going to be targeting them. They're just moving...
OK, I'll come back to it. Why would you do that? If you're not worried about reprisals, why would you move your shipping? I can understand why you would not want to have... If you're loading lots of crude, you don't want to have lots of ships in the same place, because it's an inherently dangerous thing to do. Why are they doing that? I'm trying to understand the signal that I should be getting from this.
I think that they are prudently moving their ships out of the way so that they're not all in one place, so that if oil came into play as an issue, their tankers wouldn't be targeted. If you go back to the tanker war of the 1980s,
right. Okay,
you know, they would just literally blow up the back of a tanker. They wouldn't hole it, but they would just stop it from moving, and they would just become stationary, and, you know, those are the things that happen.
And that would then represent a challenge in terms of loading others as well. Alaric, thank you very much indeed. Nice to see you. I'm fascinated by the coverage right now, so it's certainly being read with a great deal of interest. Alaric Nightingale, Bloomberg's Europe Oil Markets editor. Let's talk to another editor, our Markets Live executive editor, Mark Cudmore, joining us now to get a sense of kind of how markets are positioned going into the weekend. Mark, I'm slightly fascinated, and I can understand the kind of the relative risk around the story kind of element of this, but European equities are higher this morning on this idea that we have a 2-week hiatus in terms of US military action. And I'm just wondering how believable that is and why we're seeing risk on this morning going into a weekend that could produce God knows what.
We are seeing risk on, Guy, but it's pretty marginal. I think it needs to look at the last kind of couple of weeks in a slightly bigger context. What's amazing is that we've had this massive kind of unprecedented level of Middle Eastern conflict, and with this big spike in oil prices, about 20% higher since middle of last week, despite the fact they're slightly lower overnight. And yet most markets around the world have gone net nowhere in June, and that's after a crazy year. But whether it's major stock markets or it's major FX markets or even bond markets, all of them are relatively stable overall. And I think that gets the picture that we're generally drifting into some kind of clarity on what's going to happen on the trade war, which is still the biggest theme of this year. And probably one of the other big themes this year is, of course, what happens on the fiscal bill as well. And both those two things have a lot of uncertainty, but we should get much more certainty on what the next stage of them is in the next 2 weeks alone. So these are markets that are kind of drifting. Sure, we're a little bit risk on today because a fear of a US intervention on the weekend has now been more likely to be postponed. I agree with you that it's not definite, and therefore it's marginally risk on, but it's not an exciting move.
Mark, we're still looking at a almost 77 handle on Brent crude right now, even though, to your point, there isn't that much excitement, at least in the broader cross-asset picture. European futures showing something different. If you're a macro tourist looking for some yield, you have the ability to navigate the volatility, why not hop into some oil contracts right now?
I think because if, as a macro tourist, these are not the times to be kind of trading it, because it's where the specialists make more money. You don't know where the vulnerability is. You don't know where the position squeezes are. Macro tourists kind of getting beyond their wheelhouse is always dangerous at the best times. I know when I've tried trading commodities beyond gold, I've lost money. I once tried trading wheat contracts and it was the most foolish thing in the world. So I think particularly at this time, macro tourists aren't going to get involved. This is a time for the oil specialists, and they will be taking advantage of the curve play, of the opportunities, but it's not going to be a massive arbitrage opportunity for other tourists.
My optician told me he made lots of money of a bit of speculative oil trading, but that's by the by. Mark, just looking at the moves we've had in oil this week, it's really in a range. I wonder what gets us out of the range. Does it take, the Strait of Hormuz being blocked, which every analyst is telling us is never going to happen? Does it take US direct military involvement, which already has been shelved for another 2 weeks? What is it that moves beyond these little moves?
Well, as I said, there has been a big move in oil. Oil prices are 20% higher than just over a week ago. Nothing else is moving. As for what gets oil higher from here, I think it's going to be tough. It's going to take some really extreme scenarios. The backdrop is we've just got a lot of supply that's waiting to come through at higher prices, not just from OPEC, but including from the US side as well. So I think oil's already in a higher range, and I think the world's kind of going, this won't sustain. Ultimately, it will come lower because all the supply is just waiting to come into the market, and that's why the rest of markets aren't reacting.
Bloomberg Markets Live executive editor Mark Cudmore joining us for some analysis this morning. We thank you so much. You get more from him and the team. MLIV Go is the function on your terminals. Go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So Barclay Group out with numbers today in the UK home builder space, actually looking pretty solid in terms of their latest quarterly numbers, and their order book actually holding up. But it does seem like some disappointment that there wasn't specific guidance on where the sales are going to go for the rest of the year. We can see that stock having a bit of a tough run over the past 3 months, but actually it has outperformed against some of its rivals. It's one of the more highly valued UK home builders, as we can see on these price-to-book ratios here. This is because of their exposure to London, which has held up a little bit better than some of the other regions. So keep an eye on the home builder stocks today. Then we've got satellites in focus as well. Eutelsat doing a €1.4 billion fundraising subscribed by the French government. Now, this stock had a bit of a crazy run over the past 6 months or so. We can see that spike up here on a potential speculation that it would get a contract over in Ukraine, and also the general rally in defence stocks. However, longer term, we can see why this company needed this fundraising. It's really had a massive slump. It's had a lack of orders coming in before this little spike that we saw back in March, and also a lot of competition in the space. So we can see over the longer term an underperformer, but that one is called higher in France today. Then the energy stocks in focus, of course, with the oil dynamics that you guys have been discussing on the show. So the oil price coming off a little bit today potentially means we're going to see weakness in the big oil majors. We can see on a 1 month basis it's done well. It's up 7% in terms of the sector, given the 17% rally in the crude price. But keep an eye on the usual stocks in Europe today: BP, Shell, TTE, Total Energies, also Eni as well. All of those in focus this morning.
All right, Joe Easton, we thank you. We have Brent currently weaker, 2.6%, $76 a barrel at the moment. A lot of a disparity with WTI crude, but that is because WTI never closed yesterday. So it's Brent you should keep an eye on. As Joe says, watch the energy stocks at the open. The opening trade coming up next as futures, more broadly European-wise, are pointing higher. Stay with us. This is Bloomberg.
Friday morning, good morning. The US will be back today, so that's significant in terms of the direction we go in. Nevertheless, it has been a lumpy week and a negative week thus far for European equities. I give you Exhibit A, which is the Euro Stoxx 50 over the last 4 days. Monday to Thursday, we drift lower. Yesterday's a bit of a non-event, to be honest. So the first 3 days we drift lower, but we didn't bounce yesterday. This morning, it looks like we may see a little bit of a bounce. It feels very marginal this morning, and it doesn't feel like it's built on solid foundations. But we look like we're going to be up a little bit, Lizzy.
I hear your scepticism, Guy. The reason that we've got this green across the screen when it comes to the European futures picture is because of the White House saying that Donald Trump is going to take 2 weeks to decide whether he actually wants to get directly militarily involved in the Iran-Israel conflict. It was a miserable day, as you say, yesterday for European equities, but a bit of relief it looks like we're going to see in the European picture today, Kriti.
Absolutely. And of course, as we're talking about watching one eye, the geopolitics, there's plenty of read through when it comes to individual stocks, plus some M&A news in the defense space. Of course, the energy stocks are going to be our prime focus as we see perhaps the move in Brent crude magnified in the oil majors. That's been the story for the FTSE 100 in the last couple of days. Some M&A news in terms of Eutelsat and Kongsberg. I'll start with the bottom up here. Eutelsat perhaps getting a little bit of a bid, a bigger stake out of France. So a bit of a government story there. We'll see those shares perhaps reacting at the open. That was reported, I believe, last evening. And then Kongsberg as well. We're getting Lizzy actually talking about Belgium and Luxembourg buying some of the material from Kongsberg as well for the tune of about €2.5 billion. So prepare, Guy, for some sort of big move in defense stocks alongside perhaps energy this morning.
Yeah. Buying Europe seems to be the theme. We're going to have a great story comparing and contrasting the luxury sector and the defence sector a little later on in the programme. But let's now talk about the market open. It's time for the opening trade. Let's show you some numbers. We're anticipating a positive start this Friday based on what? Well, the loose idea that maybe Donald Trump once again is issuing a 2-week timeline for something to happen. He's used it in the past for trade, for all kinds of other stories. Now we're applying it to whether or not we are going to see the bombing of Iran. The Stoxx 600 is up by 0.1%. The FTSE 100 is up by 0.3%. The IBEX in Spain is up by 0.3%. These are not dramatic moves, considering as well that we've seen a week in which we have seen stocks lower. But it's interesting that we are up going into a weekend when the situation can evolve quite significantly in the Middle East. So we'll wait and we'll watch and we'll see what happens. But we're climbing a little bit now. Let's call it 0.4%, on average. Kriti, Lizzy, what are we seeing in terms of the sector story?
Well, at the bottom of the basket is energy, and we have, of course, Brent weaker today. It's down 2.5% at $76 a barrel on this relief, as you say, about the White House saying that Donald Trump's going to wait and see whether he wants to get involved in the Iran-Israel conflict. But every other sector in Europe is in positive territory today, and it's travel and leisure leading the gains up more than 1%. Autos and parts not far behind, and tech not far behind that. Just in terms of some of those individual stocks that Joe was mentioning earlier, he mentioned Berkeley appointing the CFO as its CEO, and those shares are actually down 0.2%. He mentioned Eutelsat raising this 1.35 billion euros to build Europe's Starlink rival. Eutelsat up 5.3%. So traders really liking that announcement, Kriti.
Absolutely. But in terms of the broad macro picture, it's reversal from the trades that we've seen in the last couple of days. For example, in the last couple of days, every day at 8 o'clock, we would see BP, Shell, Total at the top of the pack, really resisting the broader risk-off sentiment that you see. Today, it's the exact opposite. In fact, what's dragging the benchmark down amid a sea of green is, again, BP, Shell, Total, which tells you right off the bat that this is just a little bit of a rotation. It's light volume. It's light liquidity. The U.S. was off yesterday as well. It's likely to be light trading today. So that's all feeding into this. And I think, Guy, you mentioned triple witching as one component.
But people have also just you're using these just basically to trade in and out.
Yeah.
Here is a proxy for what is happening in the Middle East.
Vehicles of volatility, absolutely.
And that's a great phrase. Then that is what we're seeing, sort of in and out, in and out. But I don't know where we'll be by the end of the day. This is... Donald Trump has given us an arbitrary 2 weeks. The market seems to be latching on to the idea. And you can kind of understand the arithmetic on this. Yesterday, it felt like a racing certainty that the US was going to be involved, and fairly soon. We've now got a slight change in the kind of the bid offer on that, and whether or not it comes today, tomorrow, or in 2 weeks' time. The narrative has shifted just a little bit to the right in terms of action not happening, and you get that being priced, and that appears to be just what it is. But we don't know. 2 weeks is a completely, he keeps using it, a completely arbitrary time frame. So we don't know what's going to happen over the weekend. We don't know what's going to happen next week. We're just kind of, as we discussed earlier, treating the oil stocks as a proxy for what could happen or might not happen.
Well, let's bring in Kieran Nandra, Head of Equities at Jupiter Asset Management, for some analysis. Kieran, I'm trying to make sense of this. We're all trying to make sense of this. Green across the screen for European equities, US futures lower. As Guy says, we're trying to interpret the geopolitical risk and what's really in Donald Trump's mind. Who's reading the room right?
So I think in terms of where we're seeing kind of the sea of green at the moment, that's absolutely just that relief trade, if you like, about today's news. But to your point, what is going on in people's minds, that's going to be incredibly difficult to interpret. But I think what I would try and do is just take a bit of a step back. I think we are seeing a return of risk appetite back into European equities. That's over that kind of medium to long term. We've seen a lot more positive pronouncements over the last even kind of 3 to 6 months. One thing I just maybe want to focus on is a little bit around, we're seeing manufacturing PMIs that are actually looking a lot more positive versus services PMIs, and that's been for the first time since 2021. So I think what we're seeing actually is a lot more, return dispersion within European equities, and I think that gives that asset class a lot of legs.
But not to be gloomy, I just want to come back to this 150 number. Jennifer McEwen at Capital Economics yesterday flagging you could have oil going to $150 a barrel if Iran retaliates in a major way. Yeah. Where does that leave European equities?
So I think just maybe just taking it again, so in terms of oil, I think how we look at it in terms of our bottom-up kind of stock selection, we'll be looking much more at how that's impacting particular types of stocks and industries. So we'll be looking at supply chain resiliency. But just on that oil point, I mean, if we think about Iran is producing 1.5 million barrels a day. You've got OPEC spare capacity of around 5 million barrels a day. There's still a lot of give, I would say, in the in the sector. But in terms of how it actually impacts European equities, there's a lot of much more domestic plays as well that we're able to kind of leverage off of in the European space. So that is those domestic names, those smaller cap names in particular are having a real kind of renaissance, I would say, and we would expect that to continue. So I think just in terms of that big term picture, there's still about a fair amount of capacity, but we'd be looking at companies which have those much more resilient supply chains that can kind of deal with the kind of higher oil prices.
Talk to us a little bit about the go-to trade that was so popular in the first 3 months of this year, that is European defense, ultimately, bolstered by this idea of German fiscal spend.
Yeah.
that hasn't, even in the face of geopolitical risk, hasn't seen the same momentum in the last couple of, well, days and weeks, I would say, as did in the first quarter. Is there a valuation question to be had when it comes to the defense sector?
So for the defence sector in particular, so those stocks have done really well. I'm thinking about specific German names, but in terms of what we're seeing, earnings revisions, those earnings revisions are still looking really strong. And I think for this sector in particular, it's really where is the incremental growth going to come from? And so we're still seeing in terms of defence, in terms of infrastructure, those are still big tailwinds for the sector, and actually just more broadly for European stocks in general. So you kind of mentioned defence stocks, but also just that kind of more cyclical sectors and cyclical industries. Those still have a lot of levers. I'm thinking, industrials, financials, as well as defence, and those still have a lot of legs. So we're seeing again those earnings revisions still looking good, and we've also had, for example, Q1 earnings, and those have been pretty positive.
Well, a lot of that though is promises of contracts at the end of the day when it comes to the defense sector specifically. But when it comes to a defensive trade, ignore part of the pun, if you will, we're starting to see it show up in European tech names, again, very similar to what we saw in the States. We're seeing it in healthcare as well. Two areas that are directly, I think, exposed to trade negotiations and policy out of the United States. Why would that be the defensive trade in this market?
So I guess those stocks have typically been much more that kind of quality growth. When you've got that kind of more risk-off environment, it's it's those companies that are perceived to have bigger moats, and so that's been one reason that's been driving those types of names. But again, I think we would caution about having exposure to those export-led sectors, and actually those are the sectors which have that higher sensitivity to bond yields as well. So if you are expecting a more normalised interest rate environment, those aren't necessarily the sectors that we want to be, those kind of more kind of quality growth, are not those kind of types of sectors that we'd want to be exposed to, because they have that kind of double vulnerability.
You said a number of times this morning, it's got legs, that the European story has got legs. It feels like it's run out of puff, if I'm being honest, this morning. The last couple of months, European stocks have just gone nowhere. Yep. I'm looking at the breakdown for the last month. The only sector, there's two sectors in positive territory over the last month. Energy, which is up 6%, massive 6%. Every other sector, bar real estate, is in negative territory. Autos are down by 10%. Retail's down by nearly 10%. Luxury's down by 8%, 9%. Media's down by 8%. There's some really big heavyweight sectors that are massively underperforming. The only reason European equities are holding up right now is because of a handful of energy stocks that have done relatively well over the last month. But even in that phase, that last month, European equities have rolled over quite significantly. Isn't there a danger that the kind of the momentum, and I've seen this movie before one or two times, that Europe promises a lot and then fails to deliver? Are we getting to the fail to deliver phase? Why are we not, if we're not, seeing that?
So we are incredibly sensitive to that. And if you think about valuations, they're at 15 times. They're not screamingly cheap at the moment. So in terms of where we are today, I think European equities are stuck in a bit of a holding pattern. That's kind of compared to the 9th of July tariff pronouncements. But also, are we going to see that cyclical upswing that comes through in 2026? So you're absolutely right. I think in terms of what we're seeing from the European Commission, that will take time to come through. But I just mentioned, for example, manufacturing PMIs. That will again take time to play through into equity markets. That's looking a lot more positive. If you look at, for example, capex to sales ratios, those have increased at the highest level in 10 years. So that tells us that bottom up, what companies are doing are actually investing in growth. And that's something that we
do you believe those PMI data? Do you believe that PMI data, in as much as it can be skewed? The relationship to the real economy has been at best mixed over the last few years. And B, the tariff story has created a lot of, particularly in the manufacturing sector, front-running. And we have seen front-running into the States, front-running into various markets because of the tariff threat that exists. So you've got to get the goods in now. And basically you're selling forward in terms of some of the demand.
So is that kind of front-loading? And so those manufacturing PMI numbers have been linked into, I guess, industrials and capital goods. But behind that, we've also got big spending expectations, and that's going to happen. Defence and infrastructure. And so those are kind of really, really big numbers that we're expecting in terms of the impact on GDP. We're still thinking about 40 to 50 bips impact, positive uplift to GDP for European numbers overall, and that will have a positive impact on equity as well. So I think we are stuck in a bit of a holding pattern. We are seeing bottom up that those capex to sales numbers are increasing. That shows to us a bit of a mindset shift towards growth, and companies now investing in growth in the way they haven't done historically. So, but to your point, I think we will need to see, and it will be incremental. It's not going to be linear. It's going to be a kind of incremental process that develops over time. But we're seeing that kind of bottom-up positive signs.
Karen, a lot of the issues you just talked about are the same conversations being had at central banks around the world. I'm going to start with the U.S. There are 2 cuts priced into the bond market from the Federal Reserve, plenty priced in from the ECB, the BOE, et cetera, and around the world. Are cuts priced into this equity market?
Our cuts are priced into equity markets. I think, again, when it comes to what's actually priced in terms of expectations, I think for the banking sector, that's a sector that's been doing very, very well. But I think in terms of, I think there's still room to go in terms of whether that's been priced in or not. There are certain sectors, again, which are the cyclicals, which are much more positively exposed to that, and so there we'd be looking to get more exposure to those types of names. And again, that would be positive for some of those more defensive stocks.
Kieran, nice to see you, as always. Thank you very much indeed for stopping by and seeing us. Kieran Nandra, Head of Equities at Jupiter Asset Management. Call 6 looks like this. You are looking at a largely positive picture emerging. In terms of where you are seeing the strength, you are seeing it in tech this morning. So ASML is a little higher. You're also seeing that in Schneider as well, which is a kind of tech derivative trade. A little bit of safety in Nestle. It's interesting to see that Novo is off this morning. The real trade, which I don't have on this board this morning, is what's happening with the oil story. But fortunately, Joe's here with the details of that.
So that is where we will start indeed, Guy, because we are seeing significantly lower energy stocks today. We can actually see the Stock 600 Energy Index coming down around 0.7%, with the crude oil price declining around 3%. I was seeing BP, Shell, TTE, Eni, all of those dropping at the open of trading. And there we go, confirming it right there. We've got Shell down 1%, BP 1.3%, Total, Eni, all of them trimming their recent gains. Remember, up around 7% over the past month, one of the best performing sectors, or if not the best performing sector. And this is feeding through as well, importantly, into airlines, because airlines, actually the best performing subsector this morning. We're seeing all of them gaining because the lower crude price does actually mean that we could potentially see easing concerns around the jet fuel prices. The screens can't keep up with me today. I'm moving too quickly, but take my word for it. We are seeing airlines rising. IAG was at the top of my screen. And we will move on, though. We'll look at Barclay Group, I should say. Always a difficult one to know how to pronounce that one. I do believe they go with Barclay. But the stock down today. Analysts saying the guidance is disappointing on this one. JP Morgan saying that actually the guidance wasn't good enough. The numbers in the past quarter look pretty strong for the home builder. But the stock really hit hard today on the concerns around the outlook. Not actually firm enough. And here we've got that wonderful chart that I actually made myself. I'm very pleased and proud of this one. Berkeley, one of the highest value home builders in the market at the moment, but the stock coming down again. So actually those price to books might actually drop a bit this morning. Then in terms of Eutelsat, this was an interesting one because we did see that fundraising getting 1.4 billion euros of cash, but the stock was bouncing around at the open of trading. It was down and now it's up again. Another note I saw, again, it was JPM. They were saying that the company really throwing good money at bad because the company's got so much debt, so much leverage. This, although it's 1.3 or 1.4 billion, it won't actually solve all their debt issues. So a bit of concern, bit of volatility, but the stock managing to gain very slightly. Over in M&A, UniCredit getting conditional approval from the European Union on their takeover of BPM, BAMI, that one they've been trying to do for a while, but still uncertainty around whether Italy will approve it. So not yet a done deal, but the stock for UniCredit is higher. And then finally, in the hearing aid space, this is a big company, Sonova. It's worth about $20 billion in terms of the market cap, but it's downgraded at Barclays. It says its partnership with the US retailer Costco probably not going to be as good as expected, and that one significantly underperforming over in Switzerland this morning.
Joe Easton from our equities team, we thank you so much walking us through some of those early movers on this Friday session. As he was speaking, we do see some headlines crossing from Iran, specifically on, of course, where these nuclear talks lie. These comments coming from the Iranian foreign minister talking to state TV, saying that they don't want to negotiate with the United States as Israel strikes. They will only hold nuclear talks in the EU meeting. Of course, those foreign ministers due to speak today in Geneva.
Doesn't that somewhat vindicate the European stance, where they're kind of taking Iran at face value, where, you know, they're not just seeing the nuclear program as for military purposes? When we were talking to Barbara earlier, she was kind of saying you need to get real. And the US is real about this, but this is precisely why Iran doesn't want to talk to the US at this point, because it's so obvious that the US is on Israel's side and not trying to mediate between the two. Is one interpretation.
It's one interpretation. I don't know, is the honest answer. I suspect the Iranians are trying to find an alternative means, but whether that's great.
Yeah.
Nice. Yeah, fantastic. You guys go and talk, but whether or not actually the reality of the situation delivers anything tangible.
It's absolutely true. But if there is a question here of where those talks are happening, if any, it's happening via, to your point, the Europeans and the Iranians at a place where they were supposed to happen in Oman as the diplomatic people there. And Barbara, we talked about that. Who is actually talking about coordinating those conversations? And that is perhaps where the Europeans have a little bit more power. The effectiveness, as Guy said, completely up for debate.
Yeah, but surely the hope, the reason that the market was latching on to that 2-week delay is because they're taking the signal that Trump is opening the door to negotiations. Does he really take the negotiations seriously? We'll have to see. Coming up on the programme, Rheinmetall replaces Kering in the Euro Stoxx 50 today. It's the story of Europe's resurgent defence sector, as we were just discussing with Kieran, and its struggles in the luxury space. We'll bring you all the details next. This is Bloomberg.
Welcome back. 20 past the hour, 20 minutes into the equity market session, and we are higher. There you go. Look at the green on the screen that you are seeing right now. It does seem as if people are taking, on balance, the idea that maybe risk has reduced as we watch Donald Trump talk about the idea that he will make a decision in the next 2 weeks. Like, everything is in 2 weeks. But within the next 2 weeks, we are going to see a decision made by the president as to whether or not he will involve US forces in Israel's move to end the Iranian nuclear program. All of this is causing significant consternation, I have to say, amongst the global airline community. American Airlines suspending daily flights from the United States to Doha, the capital of Qatar. United Airlines pausing service to Dubai because of heightened tensions in the Middle East. You've got oil prices to factor into your thinking. You've got closed airspace to factor into your thinking as well. We're also waiting to find out exactly what happened with the investigation, what is the ongoing investigation into what happened in India. Let's talk about all of this. Bloomberg's managing editor for global aerospace and defence coverage is Bloomberg's Benedict Camel. He joins us now. Benny, good morning. Let's talk about kind of the latest in terms of the challenges that global airlines are facing. The Israel-Iran war obviously is causing multiple issues. In terms of the response, cancellation seems to be the easiest thing to do right now. Where are we seeing them and where?
So we're seeing them really across the board, but principally last night we saw them out of the US. We had American Airlines cancelling flights into Doha, the capital of Qatar, and into Dubai. We have United Airlines cancelling flights. And Doha and Dubai are obviously very important hubs. They are really connective super hubs in the Middle East. A lot of airlines funnel their sort of east to west and the other way flights through those two hubs. So to cancel those is a fairly robust signal. We had seen cancellations to Israel, obviously, over the last couple of weeks. Companies like Lufthansa, like Air France and so on, have cancelled some flights into the region. Tehran, Lufthansa was one of the last airlines to still fly there, one of the last Western airlines. That's also cancelled. Those were sort of the obvious ones, but for this to now go wider and to go into places like Doha, like Dubai, that shows that there's a significant concern out there among airlines. You know, the simple concern might be we don't want aircraft to be stranded in the region. If you look at places like Jordan, like Beirut and so on, that's where a lot of the flights have been cancelled, and you don't want your aircraft out of position if that airspace gets closed. Obviously, far more seriously, you do not want your aircraft to get shot down, to put it very bluntly. So there's a lot of caution out there right now, and that's what we're seeing in terms of the response.
So, Benny, there are real dangers of flying through these zones then, but how does that closed airspace make things difficult for business? How significant is it for business?
it is becoming increasingly difficult. It's something that we've seen over the last couple of years, frankly. The Russian airspace, the Ukrainian airspace, those have been closed to many airlines. Some airlines like Emirates, they still fly through that airspace, but most Western airlines have avoided the Russian airspace, the Ukrainian airspace. So a reminder to people that this is 10 years ago exactly that MH17, the Malaysian aircraft, was shot down over Ukraine. And that was really a sea change for the industry, a real rethink in terms of the safety of flying even at high altitude. But the zones that now are closed or the airlines are avoiding, those are important zones. Obviously, Israel's a small country, but it sits right at that intersection of a global air path, to the Middle East and then beyond into Asia. So closing that additional airspace is, quite difficult for airlines. We had the India-Pakistan situation. That seems to be a little off the boil at the moment, but still some airlines wary of that. So a lot of that space is becoming much harder to fly across, and airlines have to circumnavigate it.
All right, Bloomberg's managing editor for global aerospace and defense coverage, Benny Campbell, walking us through those risks to the aviation space. But he also mentioned the defense component as well. Let's go there next. German defense firm Rheinmetall set to replace Gucci owner Kering when it comes to the Eurostoxx 50 benchmark today. Charlie Wells is here to talk us through the change. So defense is more in fashion than fashion?
Oh, that was a good one, Kriti. And yes, basically this is kind of an indication of kind of a shifting European economic situation, right, where we've got much more of an emphasis on defense. You're now getting less of an emphasis on these kind of fashion firms. And this is a kind of case in point, right, of this firm, Rheinmetall, having a stellar May. And so they've been fast-tracked into that blue chip index.
We had a guest on a few minutes ago talking about the idea that actually the PMI, the manufacturing PMI, is telling us that there is European renaissance in that space. Is this is what we're talking about, basically, isn't it?
This is a singular data point that makes that point, right? It's evidence for that. And I think it's this sort of European defense story, but it's also that kind of reshoring or closer to home supply chain story, right? Because we know that one issue that European governments have had in recent years has been, yes, we want to increase our defense spending. Oops, we're buying all of these munitions from the United States. Yep. They don't want that. So Rheinmetall plays into that important narrative, too, which is let's have this European defense come from European companies.
Charlie, we've had Kering poaching the boss of Renault. How long is it going to take to drive itself back into the stock 650?
Yeah, that's a really good question.
Like terrible jokes this morning.
You guys
These
are good.
Excellent jokes. Excellent. These are jokes are done, guys.
You guys are good, but it's hard to come in and out of this index. I looked back, and actually in 2011, Unicredit fell out. So did Nokia. Both those names are back in it. But the issue here is momentum, right? So because when a stock enters this index, it gets momentum. There's ETF buying, of course, and so it's really hard to keep pace with that.
We wait to see it. Kering's acceleration.
If I made these jokes, they would be dad jokes, okay? I'm just going to point that out. And I would be pilloried for them.
This is the effect you're having on us by association.
My work here is done.
Bloomberg's Charlie Wells, we thank you. No dad jokes from you, thank God. Coming up on the programme, how would escalation and Western intervention in the Iran-Israel conflict play out? We're going to speak to former Lieutenant General Simon Mayle next. This is Bloomberg.
About 30 minutes into today's session, we are seeing green on the screen, although perhaps pairing some of their opening gains when it comes to the stock 600, higher by 0.5%. Outperformance when it comes to the German complex. A lot of defense stories in the mix today, not necessarily a thematic theme, but you are seeing a couple in terms of M&A income, in terms of stakes, in terms of investments as well. So we're going to keep one eye on that, but also keep in mind Europe has been down for the last 3 sessions, so light volume, light liquidity, likely pushing some of the green on the screen. In the meantime, let's go back to our top story this morning, which is, of course, in the Middle East. Iran's foreign minister due in Geneva for talks with European foreign ministers today. Bloomberg's Oliver Crook is all over this story. Ollie, walk us through what we can expect in Switzerland.
Yeah, so what we're going to get today is the Iranian foreign minister, as you mentioned, they're arriving in Switzerland and Geneva, speaking to his counterparts from Germany, from France, from the United Kingdom. We understand the EU High Representative Kaya Kallas will also be in that meeting. And the ambition of this meeting, we should say this is the first time that this constellation of people has met in person since the beginning of the conflict about a week ago. They did speak on the phone on Monday. And what they're trying to provide here is trying to work out basically a framework for monitoring of Iranian nuclear production and the new Iranian nuclear program program that could be implemented in the event of a ceasefire and could be a step towards peace. That could also include things about their sort of cruise missile program, maybe diminishing stockpiles, and trying to come together with an agreement or some sort of framework that could be used. The problem that you have here is, as far as the Europeans are concerned, they have very limited diplomatic clout in the region, as we know, on Israel and on the Iran. They have very limited amount of leverage that they can exert. And we know also that the Trump administration is not terribly interested in sort of collective diplomatic efforts. They're really going to want to put forward their proposal and say what they want to happen. They're not really going to necessarily rely on what the Europeans have to say about it. So listen, it could be helpful in terms of getting a conversation going, potentially getting information over to the United States. But at the end of the day, it's going to be the United States that decides this, along with Israel, in terms of the terms of how they come to the negotiating table with Iran. So yet again, Kriti, and yet again, this conversation that we keep hearing about, a geopolitical event across the global stage where the Europeans are going to act basically as spectators and not protagonists.
So, Ollie, beyond nice noises, beyond calling for de-escalation, what do you really expect the plan to be to emerge out of this?
Well, listen, we'll have to see what comes of it. It'll also come of what we get from the sort of bombing campaign, how intensely that goes forward. We have seen, Donald Trump come out with this sort of 2-week period of time. We know that the Trump administration and Trump himself likes to buy himself a lot of time so that he can sort of improvise as sort of events tend to accelerate and move forward. I mean, we'll see a little bit later. I think that we have, again, if we want to demonstrate how limited the Europeans are in exerting their influence in the region, particularly on Israel, it's in the last few days we've heard from European leaders having more and more issues with the way that Israel is conducting itself, particularly with humanitarian aid within the Gaza Strip. We've seen a lot of complaints. We've even had the Germans come and complain about it. We have had a petition that's been signed by basically 17 of the 27 EU member states to look at revisiting the EU-Israel Association Agreement. That's an economic pact in order to potentially exert pressure, but that is not really something that the Europeans can do at this stage, exert pressure on Israel or on Iran. So again, I would be sort of limited in sort of the ambitions about what we get from the Europeans today, but again, potentially something that behind closed doors could make it to the Trump administration and could advance the conversation.
Could. Being the operative word there. Ollie, thank you very much indeed. Oliver Crook joining us in Berlin as we watch events unfolding a little bit later in Geneva. Let's carry on the conversation and get some analysis on what we can expect. Sir Simon Mail, a former Lieutenant General in the British Army who served as the UK Defence Advisor for the Middle East and Security Envoy to Iraq, joining us around the table. Sir Simon, good morning.
Good morning to you.
You sat down a couple of minutes ago and you said, we all know which way this is going.
Yeah.
Which way is this going?
Well, which way this goes is the end of the Iranian nuclear programme.
Okay.
Now, there are ways of achieving that. That's exactly what the foreign ministers are trying to impress upon the Iranian foreign minister, that the Israelis won't stop. The Americans may well double down, but there is a way through this, that we could go back to a program of really intensive verification of what Iran's up to. Now, but the track record of Iran sticking to any of that has been pretty damn poor over,
exactly.
I won't say 50 years. They didn't have it really much before the fall of the Shah. But at the end of the day, this is one of those moments in history that I cannot see a way in which, either with a bombing or no bombing campaign, Iran remains with a credible weaponizable nuclear program.
Do you think the Israelis aren't going to be prepared to stop until they have destroyed it? Are they prepared to allow diplomacy?
I think they're going to have to, because I do think they are very conscious of international disquiet about what's going on in Gaza, the long term. But there are very, very hardliners in Israel who've lived under the threat of an Iranian nuclear weapon for half a century now. So they see a window of opportunity. They see a very, very weakened Iran. They can operate with complete impunity.
So why should they stop?
That's what I mean. I think they will stop because the Americans will ultimately tell them to stop. But the Americans are unlikely to do that because they also see a window of opportunity now. And the only reason they'd stop is if Iran commits to a genuine, verifiable dismantlement of their nuclear program. Those are the only circumstances. Because we do need to worry, as my old friend David Petraeus used to say, tell me how this ends. Because if we do bomb, if a regime collapses, even if that's not the declared political intent, we're left with a whole set of consequential problems. But I would say at the end of this, we will not have Iran with a weaponizable nuclear capability. I think that is the key message that's going to come out. Now, that Iran, you you may want to negotiate this, you may want to offer this. It means we stop the bombing, but we are not playing cat and mouse again as we have done for the last decades.
Okay. Does the end of the nuclear program come with the end of the current Iranian regime?
It could well do. It could well do, and that would give us another set of problems. You know, only 2/3 of the Iranian population, of 92 million, as Ted Cruz now knows, are Iranians. The Azeris might break. The Baloch kicking off down in the south. There's a big Arab population there. And there's an awful lot, and I'm sure you've reported on it many times, there's an awful lot of discontent with the economic record of the current regime and its suppression of human rights. So it's extraordinary how history teaches how remarkably fragile some of these seemingly very powerful regimes can be if they suddenly lose the capacity to kill their own people.
So there is a conversation, though, that in that scenario, the IRGC has someone ready to take control and standing in the wings. Is that a fair assessment?
It could be. It could be. And again, you know, we saw Libya. I think we're very scarred by Libya. We're very scarred by our occupation of Iraq. I don't think that's going to enter, frankly, into the determination of the Israelis, but it will certainly enter into the determination of Trump. And his senior generals around him were all scarred by the experiences of Iraq and Afghanistan. So what we do not want to do is solve one problem and then generate huge consequential problems for the region. And our Gulf allies will be looking very carefully at this, about what the consequences of having a regime failure on the far side of the Arabian Gulf would lead to.
You referenced initially Iraq and Afghanistan. Are we headed towards boots on the ground, not just from the United States, but the UK, other European allies?
No. And when people say, you know, do I think Britain will fall in behind the Americans, I say yes. There are ways of falling in behind. Diplomatic, political, logistical, intelligence, all the sort of deep infrastructure relationships we have. I don't necessarily see us joining in a bombing campaign. I don't think there's anything the Americans or the Israelis need from us. I do see us, if there was another spasm of attacks on Israel, perhaps supporting the defence of Israel. We've done that before. I think British military facilities, Chagos Islands, Diego Garcia, Cyprus would be at the disposal. But there are a lot of things we can do that would be support. And I seriously do not think we see boots on the ground. I think if anybody wants that, I think all of us just want Iran not to be the menace and parasite it's been for the last 50 years in the region, and certainly not have a weaponizable nuclear capability.
But Sir Simon, if the bunker-busting bomb is launched from Diego Garcia, and that's a joint UK-US base, doesn't that pull the UK into the conflict inadvertently?
Oh, it does, absolutely. But we're in it already, to be honest with you. We have been defending against missile strikes in the Red Sea. We have been defending against some of the missile strikes on Israel earlier on. We're not as exposed as the Americans in terms of numbers, but we've got air assets, we've got soldiers on the ground, we've got naval assets in the Gulf. So and we're members of the P5, and we're NATO leader. So the idea that we could be a spectator in this, to my mind, is fanciful. However much pressure the Prime Minister is going to feel upon him. Hence why it's important that Lamy goes out there, demonstrate that the Iranians are completely obdurate about this nuclear program.
But isn't it the case that under the Chagos deal, as Labour has negotiated it, that
hasn't been signed yet?
Well, we would have to let Mauritius know that there's going to be a strike if the US is going down that route, and Mauritius is getting friendly with Iran, so doesn't that put the UK troops there in more danger? Doesn't that show that the deal itself has undermined safety?
I'm not a supporter of the deal. It probably comes through loud and clear. I don't think we should be doing this deal. I think it's been done on the basis of completely fatuous sort of argumentation. But the reality is, the Americans will have every right to use it. We may, in the position where we have to inform the Mauritians. I don't think we quite do yet. But we are very exposed. But that's the nature of Britain. That's why we're so different from many other countries. We're a global nation with global responsibilities, with global reach, with strong allies, and we are not a country that can, to my mind, in our DNA, step back from these big issues. And I think on this one, the Iran issue is one of those another pivotal moment in the history of the Middle East. But there is opportunity in among the danger.
Donald Trump has said 2 weeks. We'll make a decision in 2 weeks. Take us behind the scenes. If you were planning an attack, if you were thinking of exposing your forces, what's going on right now in terms of the preparedness, the readiness? How ready are we to make a decision? How ready is the United States to make a decision? You're not in the room, but these things can happen quickly, right? It feels like we're dealing with a very sort of arbitrary time frame this morning in terms of, I'll make a decision in 2 weeks.
Well, it is a slight nature of the new Trump administration, but we did have 4 years to get used to it under Trump 45. Yeah. And it is, I think it's very unsettling for policymakers. We're used to options being put on the table, discussions, courses of action. Yeah. You know, this is one where it's not an argument.
Would you take him at his word that it's within the next 2 weeks he'll make a decision?
Yeah, I do, actually. I feel we've got a certain amount of time for negotiation. I don't think Donald Trump would be necessarily tied by that. I think there are hawks in the American administration. Equally, I think there are people, given a sort of isolationist MAGA baseline, memories of Iraq, do not wish to get drawn into a never-ending war. But I think the options are on the table. But as I say, I think at the heart of it is the opportunity for Iran to step back. Now, the question then is, do you simply go to take out the nuclear facility for Natanz, we understand has been badly hit already, or do you actively attempt to overthrow the regime and say that's it? But I think that would be things that people would have difficulty with. And then you're slightly dancing into an Israeli agenda, and we want to be very clear that there are conflicting agendas. At the heart of it is a problem set that's quite quantifiable, the Iranian nuclear capability and its potential to weaponize. And that, I think, will be gone in one form or another as a result of the current.
Well, I mean, as well as your military experience, you've also been a historian chronicling the clashes of Christendom and the Caliphate. I mean, I just wonder what lessons we should be drawing from history at this point as we question what Donald Trump and what the UK should be doing in the next 2 weeks.
I mean, I think this is the interesting thing about American involvement in the Middle East is sometimes, and nobody could be a greater transatlanticist than myself, it's a deeply historical area where if you don't make it your business to understand the culture, the history, religion, confessional divide, you're talking about countries in the Middle East, which is such a sort of rather lazy expression, with deep, deep histories. You know, the Turks with the Ottomans, the Egyptians with the pharaohs, the Iraq with the Babylon, Nineveh, clearly Damascus, Baghdad, and then the Iranians, who are deeply proud people with an extraordinary depth of civilizational awareness. And so we've got to be careful about dealing as if they're sort of countries like on the game of risk. You know, they're geographical and they're very historical. And understanding the difference between Iranians, Turks and Arabs and Egyptians, understanding the difference between Sunni and Shia, understanding that actually Iran is quite divided, Azeris, Baloch, Arabs as well, is really important. We didn't do our homework for Iraq, and we paid the consequences of not doing that homework.
Very much the point that was made to Ted Cruz, you might say.
Well, Britain's a historical country. We've been, in that region for a long time, for better or worse. And I think because we're a historical nation, we find these differences and these historical antecedents deeply interesting. I think it's in our blood. I'm a history graduate by nature, and hence, the two books on the Middle East. But I think it's important, and there are all sorts of mistakes we made in the occupation of Iraq that I think we could have avoided. And interestingly, we are reaching out to the Iranians. We are reminding them of their great imperial background, their great ethnic background, their civilizational influence, and almost saying, you have a totally unworthy regime in the Ayatollahs for a nation as great as yours. And I think trying to thread that thread through the needle at the moment to try and end up with, that, as I say, tackling that very quantifiable problem, the nuclear thing, and keeping Iran without feeling humiliated or even just becoming a failed state, a la Libya.
Certainly a tricky line to draw. Simon Mayo, former UK defensive advisor for the Middle East and author of the book The House of the War, joining us this morning with his analysis. We'll be back with more. Stick with us. This is Bloomberg. Bloomberg has learned that SoftBank is looking to team up with TSMC in what could be its biggest ever bet. The plan involves a $1 trillion industrial complex in Arizona to build robots and AI. SoftBank founder Masayoshi Son envisions a version of the vast manufacturing hub in China's Shenzhen that would return the high-tech manufacturing back to the United States. Bloomberg's Tom McKenzie is all over this story. We were talking earlier in the show about the realistic possibility of this. We're talking about $1 trillion worth of investment out of SoftBank. Put that into context for us.
Well, this story poses a lot of questions, to your point. What you can't do is fault Masayoshi Son of SoftBank for his ambition, and it is absolutely gigantic, isn't it? $1 trillion, and he wants to recreate a kind of Shenzhen in the US, potentially alongside TSMC, of course, the foundry, and, of course, Samsung as well. We haven't heard comments from them. The money that would be involved, where would that come from? Private capital. SoftBank doesn't have the capital, clearly, to fund that. Portfolio companies. Part of the reason he wants to do this is to ensure that there is the supply chain for his own portfolio companies and make sure that they are lifted and elevated on this front. You would imagine that OpenAI would have a piece to play, as would ARM as well, that is moving closer into data centers in terms of their CPUs aligning with AI accelerators. It's an absolutely gigantic plan at a time, of course, when TSMC already has its investment commitments in Arizona in terms of building out a foundry there. So lots of questions that go with this, but I think it's a reminder, number one, of trying to hit the sweet spots when it comes to President Trump's ambitions to build out that manufacturing in the US. And you would have thought that at least top line he would welcome this. And we know that there have been conversations between Massa and Howard Lutnick of the Commerce Secretary, of course, in the US. So it hits that and it ticks that box in terms of Trump's ambitions. But we do need to find out where the capital is coming from, where the spending is coming from, and whether indeed they can get the talent and the engineers not just to build all these projects, but actually to operate them as well, which has been a constraint and a bottleneck in the US.
Yeah, and there's also a massive debate about whether this is exactly the right way to spend that money. It's a huge amount of money to throw at the problem, right? And clearly, Masayoshi Son very observant of his own legacy here, but is this really the way to do what he wants to achieve?
Well, it's a reminder that we're still in this environment where the infrastructure of AI is front and centre for these executives. You have the spending plans in terms of the sovereign data push that's really being led by OpenAI and SoftBank in the UAE, and you had Trump announcements around that, hundreds of billions of dollars. You've had hundreds of billions committed already to data centres in the US. You've had a trickle in terms of what's been committed in Europe and the UK. The focus on making sure the infrastructure is in place so you can kind of drive down costs and make sure that you can diffuse this technology as widely and broadly as possible still seems to be front and centre.
Sounds almost as if you know what you're talking about. Like, you should have a tech show, which I think would be something that would be amazing.
It would, wouldn't it, Guy? Funny you mention that.
We have one today.
We do. So we've launched the Bloomberg European Tech Show, launched today. And what the idea is that we focus either on a theme or we give a platform to a really big name within the world of tech. We want to explore what is happening in terms of European technology. The idea that Europe cannot innovate is bonkers. We can. There's some amazing entrepreneurs out there. There are serious questions about capital. There are serious questions about scaling. There are serious questions about how you exit. And there are serious questions about talent as well. We are answering those questions in terms of talent. I think there are 4 key things that Europe is sitting pivotally at this moment that they have to address. And I think we look back in a decade's time, we'll say, can and did Europe address these? 1 on energy, 1 on AI, 1 on defence, and 1 on, what was the other one? There's 4. Defence, energy, AI, and what is happening in terms of the healthcare sector in which Europe leads and how you can integrate AI into that. So I think in terms of all these key areas, if we look back in 10 years, did we answer the question on them? Now, I sat down with a number of CEOs for this new tech show, including the executive chief operating officer, so CEOs, and the COO of OpenAI, Brad Lightcap, and I asked him about that gap between Europe, the UK, and China and the US when it comes to AI. He said, actually, that gap is not as wide as many might think. Take a listen.
Really do feel just an incredible amount of enthusiasm and excitement from Europe. It's why we're here. And I don't expect that to abate at any point. So, in some sense, these things are kind of self-deterministic, right? It's the appetite that businesses have to want to drive transformation. It's the appetite that governments have to want to build infrastructure. It's the appetite that people have to want to really use these tools to do new things, that artists have to be able to use these tools to do new things. We see that just as much in Europe as we see it in the United States.
If there was one thing that you would prescribe that governments could do to help close what is, many would say, is still a gap, what would it be in Europe?
I think it's access, right? You've got to make sure people are using the best tools. And one of the surprising things that we've seen is we tended to think that there would be at some point where we just continue to build better and better models, but people kind of don't benefit, proportionally to how much the model has improved between generations. And that's not true. What we see in practice is every time we make the model better, people find new ways to get value out of it. They find new things to do with it. Businesses find new use cases to deploy it into. And so as we continue to push the frontier, we just think it's absolutely critical that people have access to the best tools.
Does it matter that Europe only has one large language model company, Mistral? Does that keep us constrained?
I don't think so. I think that people will ultimately gravitate to where the best models are, whether that's with OpenAI or another company. And it's on OpenAI to make sure that the models that we build serve the needs of the people that want to use them. I think that's true of any other company building models.
Okay. Where do you think Europe can accrue the most value in AI?
Ultimately, look, I think the application layer is going to be the most interesting, right? It's where you actually come into contact with reality, and these models have to perform.
Okay, that's the Chief Operating Officer of OpenAI speaking to me as part of the newly launched Bloomberg Tech Europe show, which we hope gives you a comprehensive deep dive in the first episode, which you can watch, by the way, on YouTube, on the Bloomberg Tech website on YouTube. A comprehensive look in terms of where Europe and the UK sit in terms of the AI race. You come away with that with some really clear guidance from some of the investors, some of the key names in that space in terms of what the catch-up is, where the value aligns, and where some of the investment opportunities are as well.
Cool. We'll look forward to more of it. What's it, once a month?
Once a month.
Like, we need to make it more than once a month. If Europe's going to be serious about tech, that should definitely be once a week. We'll see what happens on that front. I'm stirring the pot. Let's carry on the conversation and talk about what's coming up this weekend. If you want to head for the henge, it is the summer solstice. A very nice long weekend coming. We've also got, I understand, Dua Lipa playing in London. Kriti's going. Lizzy only knows one song. Tom, I'm sure, knows the entire repertoire. So over to you.
Dua Lipa, I think, is one of those artists that everyone says they only know one song, and then you go to the concert, you're kind of bopping along, and you're like, wait, I do know this. This is great.
She smashed it at Glastonbury last year.
Thank you.
Don't act like you went. Look, I'm going to Ascot this weekend. The two dads are mowing the lawn. I think we need to see the hat.
We need to the fun is on this side of the table, I think.
I'm mowing the lawn as well. That's where the fun is. That's what we're talking about. The Pulse is up next. Look at the weather. This is Bloomberg.